All right, good evening, everybody. Somebody drop a thumbs up in the chat if you can hear me, just to make sure that my microphone's working. My name is Jim Gaffney. I'm the Executive Director of the Theta Tau Professional Engineering Fraternity. I appreciate you being with us tonight while we discuss fraternity insurance. I don't really know why I put a picture of myself up there because I'm on your screen, but that's me. I'm a 2007 initiate of the Kappa Lambda chapter of the Kappa Sigma fraternity at Shippensburg University, and also an honorary initiate of the Tau Alpha chapter at SUNY Geneseo in New York. The purpose of tonight's program is to talk about our insurance and talk about insurance broadly so that you can get a better understanding of why it is that we pay what we do, what goes into it, what you get out of it, and hopefully, be in a position that you can explain this to some of your chapter brothers when these kinds of questions arise. So in tonight's call, we're going to talk about what insurance is very broadly. I'm going to give you some terminology so that you understand what I'm talking about later in the presentation. We're going to explain why we need to have insurance. We're going to explain what lines of insurance we have. We're going to explain what our insurance covers and what it doesn't cover. We're going to explain what our insurance costs. And we're going to talk about how what we pay for insurance and for our health and safety assessment compares to other fraternities and sororities, both within the professional community and in the larger community. A few housekeeping items. If you have questions, drop them in the chat. I will get to them at the end of the call. I'm going to minimize the chat while I'm talking so I don't lose my train of thought, but there will be time for questions at the end. Also, there's a crazy storm going on outside, so if I suddenly disappear, it means that my internet probably went out or my power went out, and I will be back just as soon as I can, so I appreciate your patience in that way. So to start with, what is insurance? So the technical definition is insurance is a contract between an insurer and the insured, where in exchange for a premium, the fee that you pay, the insurer agrees to cover the agreed upon potential losses of the insured. So put simply, it's a way to protect yourself from financial loss. Probably the most common type of insurance that is relatively easy to understand that we all interact with is car insurance. So it's basically you pay the insurance company so that in the event that there is an accident, or whether you cause it or whether somebody else causes it, you will be protected from the liability that comes from it if you cause that accident. And if you have full coverage on your car, if you cause an accident or you drive into a pole or something like that, the insurance company will pay for the damage to your vehicle. So that's the definition of insurance. It's a way of pooling risk. So it's a way for, I have Geico car insurance. So all of the Geico policyholders get together. We all put in a little bit of money every month, relatively little bit of money every month. And in the event that one of us, or realistically, a few thousand of us a year have a loss, that pot of money is more than enough to pay for the damage to the vehicles of those few thousand policyholders who experience a loss every year. Insurance originally came from ancient China, where merchants would, they put all their boats together and they put all their goods together. And so no one boat would go out containing just one merchant's stuff. So, if there are 10 boats and one of them sinks, no one merchant is going to lose all of his stuff because his stuff is spread out across all of the boats. Modern insurance, which was basically protection in exchange for a monthly or a periodic fee, came from the merchant republics in Renaissance Italy. So people have been paying to insure themselves against loss since the Renaissance. Some terms for you. An insurance carrier is the insurance company. They are carrying your risk in exchange for your monthly premium. Geico, Farmers, those are kind of common insurance carriers. Our principal insurance carrier is Lloyd's of London. We'll talk a little bit more about them later. A line of insurance is an insurance policy. So homeowners insurance is a line, auto insurance is a line. We have multiple lines of insurance, and again, we'll get into them in greater detail later. A claim is a request for compensation from the carrier based on a covered loss. So going back to the car insurance trope, if you have Geico like I do, and you back into a pole and you've damaged your car and you have full coverage, you call Geico and you make a claim against your policy. You say, I've damaged my car, I need you to pay for the damage. A loss is the damage to either people or property that results from an incident, and losses in insurance terms is generally a monetary loss. The limit on a policy is the maximum that a policy will pay out, sometimes called the value of the policy. When you're talking about life insurance policies, they will usually talk about the face value of the policy. A premium is the price that you pay as a customer to the insurance company in exchange for your policy. A risk is a specific variable or attribute that could lead to a loss. Again, in auto insurance, a risk would be you living in an area that gets really snowy weather. And that, because that risk is peculiar to the area that you live in, or is not necessarily peculiar, but is an attribute of the area that you live in, you may pay more for car insurance because it is therefore more likely that you're going to get into an accident because of bad weather in your area. That's a risk. Finally, a deductible is the portion of a claim that the insured is responsible for paying before the carrier is going to come in and pay the balance up to the limit of the policy. So again, car insurance, everybody has deductibles on their car insurance if they have full coverage. Same thing for your health insurance, same thing for your renter's insurance, your homeowner's insurance, what have you. We have deductibles on our insurance as well. So why do we need coverage? Why do we need insurance? Insurance limits our exposure to loss. Again, to go back to car insurance, most people, if you buy a new car, you're probably spending 25, 30, 35, maybe more $1,000 on a car. Some of us, I'm not necessarily being one of them, but some of us have that kind of money laying around. So, if they, blow into a telephone pole and total their car, they can go out and buy a new one. Most people can't do that though. So they get insurance so that in the event that there is an accident, they are made whole by their insurance company. Why do we need it specifically? The 15-ish chapter houses that we have, they have to have it because, investing hundreds of thousands or even millions of dollars in a property and not insuring it would be madness. But for those for those housing corporations of ours that have mortgages on the chapter houses, they have to have it. You can't get a mortgage if you don't have insurance on the property. Even for those properties that are owned outright, where the deed is in hand, where they don't have a mortgage, like I said, it would be madness not to have insurance on an asset that large. For our chapters that are recognized as fraternities and sororities, as opposed to just registered student organizations, even for those chapters that aren't registered, some of those chapters that aren't registered as fraternities and sororities, even if they're just RSOs, they're required to have insurance. Fraternities and sororities, definitely. 100% of campuses in the United States, you have to have insurance if you want to operate. But even some RSOs have to have insurance as well. Ernestine, our office manager, and myself, we spend a lot of time in September sending out certificates of insurance to campuses that need them. Not so much this year because of COVID, but in an average year, we send out probably 40 or 50 of them to campuses across the country. Finally, insurance is a business requirement for a lot of the stuff that we do at the national level. We could not possibly have a national convention in a hotel or really any other kind of property without insurance. One of the first things that they ask when you're filling out the paperwork is, what's your insurance policy number? Attach a copy of your certificate of insurance, because if we go into a hotel and start a fire, we're responsible for it, and our insurance is going to pay for that. So that's why we need to have insurance. Computer to catch up. There we go. So why is insurance so expensive? If you've ever shopped for car insurance, you can get a half a dozen quotes, and those quotes will probably vary a fair amount in terms of cost. And you can, say, okay, this is the best price for the coverages that I want, so I'm going to go with Geico or Progressive or Farmers or whatever. It's not so simple in the fraternity and sorority market. On the right-hand side of the screen is a list of the types of businesses that are most difficult to insure. The ones at the top of the list are hardest to insure, down to the ones that are slightly easier to insure. These should be numbered, but they're bulleted for some reason. So the most difficult businesses to insure in order are bars, liquor stores, childcare centers, asbestos mitigation contractors, hazardous waste disposal companies, and then fraternities and sororities. So the only way that we could become a worse risk for an insurance company is to start dealing with nuclear waste, start mitigating asbestos, taking care of other people's children, or selling booze. So it's really difficult for fraternities and sororities to get insurance. As it says in the list on the left at the bottom, there are only 3 carriers on the planet that will write insurance for a fraternity or a sorority, and only 2 of them that will write insurance for a fraternity and a sorority that has any kind of social fraternity aspects to it. And we have, even though we're a professional fraternity, we do have social fraternity aspects. Some of our chapters live in houses that are owned by the foundation or a housing corp. Many of our other chapters rent a premises and stick letters on the front and call it a chapter house. Those are kind of fundamental aspects of social fraternity and sorority. And so out of the three insurance companies, the Philadelphia insurance company will not write liability insurance for a fraternity or a sorority that has social aspects. So that means we're left with Lloyd's of London, which is our insurance company, or Admiral Insurance Company, which is the other one. And you've probably heard of Admiral because they're a comprehensive company. You can buy car insurance from them, homeowners, business insurance, life insurance, whatever. Lloyd's is a little bit more specialized, but Lloyd's is also the largest insurance company in the world, and the oldest, incidentally. But there's a very limited list of carriers that will write insurance for anybody at the top of this list, but especially for fraternities and sororities. And part of the reason for that is there is no actuarial math that can predict a loss at a fraternity and a sorority. Going back to car insurance, there's formulas that they can plug variables into and figure out roughly how many claims they're going to have based on, how many policyholders they have, the quality of their driving history, stuff like that. And so they can figure out how much they need to charge people for the policy. And then from that, they can extrapolate, okay, we predict that we're going to have to spend X number of millions of dollars satisfying the claims from our 10 million policies, I don't know, because we extrapolate that 100,000 of them will have claims. And they're usually pretty close to right, usually about 5% either way, they're right, which when you think of it is mind-boggling math. But there's no equation for fraternity and sorority insurance claims. People have tried and they're never even close. Like last year, there weren't really that many big insurance claims for fraternities and sororities, partly because of COVID. But for whatever reason, the fall was also relatively quiet. The year before, one of our insurance carriers paid out $40 million in claims not to us, to other organizations. So it's a total crapshoot. So that's one of the reasons that it's so hard to insure us. Also, the size of the claims. If you wrap your car around a tree, it's the face value of the car. But if somebody dies as a result of hazing, you could be looking at millions of dollars in liability. And so again, it's impossible to properly underwrite a policy. It's impossible to figure out what to charge in order to make sure that you're bringing in enough money as an insurance company to cover the potential claims. I think I covered everything on that list. Yes, I did. So what lines of insurance do we have? So I'm going to go through the lines of insurance that we have, explain them briefly, explain what they cover. Whoop, went too fast. Explain what they cover, and then we'll talk in a little bit more detail about the cost here at the end of here after this. So the first line of insurance that we have, and this is by far the biggest in terms of coverage and in terms of cost, is the general liability policy. It's carried by Lloyd's of London, which, as I said, is the world's oldest and largest insurance company. They insure everything. Like well, maybe if you live in England, you can get homeowners insurance from them, but you can't in the United States. They insure, Lloyd's of London is like the company that has that apocryphal insurance company on like Yo-Yo Ma's hands and his cello and stuff like that. They're that kind of company. They write bespoke insurance policies. The limit of our policy is $1 million per occurrence and $2 million aggregate. So that means we can have up to 2 incidents that result in $1 million of liability for a total of $2 million, or we can have a whole bunch of small claims, but they will stop paying once they hit the $2 million mark. The deductible on this policy is $75,000, and the premium for the year for the national fraternity is $59,894.25. Forgot to mention this at the beginning of the call. These are all numbers for last policy year. We renew our policies in November, and so I'll be getting our renewal proposal from the insurance company here in the next couple weeks. So we expect all these numbers to go up. They go up a little bit every year. That's just inflation. But these are last year's numbers. So just so you're aware of that. The general liability policy, just like the liability policy on your car, protects the fraternity in the event that we hurt somebody else and we are liable for the damage to their property or for their injuries, and they come back and sue us. The general liability policy does not protect us individually. So if a member, falls and breaks a bone at a Brotherhood event, we do not have coverage for that right now, and I'm going to talk about that later. But we do not have coverage for that. The general liability policy protects other people against our mistakes. Two important caveats with the liability policies. They only cover lawful acts. So if one of your brothers boosts a car and drives it through a crowd or something, God forbid, does something like that, that is not a lawful act. So there is no coverage for that. You have to, for the general liability and the other liability policies to kick in, the acts have to be legal, and they have to be consistent with our policies. So, we have a policy that says that you're not allowed to haze people. So if you haze somebody and you hurt them, which presumably you will because hazing generally results in injury, you will no longer be protected by our insurance because A, you're breaking the law because hazing is illegal in all 50 states. And you are not acting in a way that is consistent with our policies. So you will no longer be the beneficiary of our protection because you've broken the law and broken our policies. Which is not to say that insurance companies don't settle hazing cases. Settling a case is different than actually providing coverage, and that's why you read about these multi-million-dollar hazing settlements and stuff like that. But that's the general liability policy. That's broadly what it covers, and broadly what it doesn't cover. The next policy is the excess liability policy. This is exactly like the general liability policy, but it's extra on top. So the general liability policy provides coverage for up to $1 million per incident and $2 million total. The excess liability policy adds $1 million on top. So we have $3 million of liability policy for general liability claims. The excess carrier is James River. They are the only company on the planet that still writes excess liability policies for fraternities and sororities. Their premiums have been doubling basically every year for the past few years because this is the company that paid out like 40 million in claims a couple of years ago. They're just absolutely getting hammered, but because they are the only game in town, they can charge literally whatever they want. So I expect our premium to go up significantly, even though we haven't had any claims. And ironically, there's thunder right now, so I guess that's the gods agreeing with me. The premium is probably going to go up, but we have to make sure that we have at least as much insurance as we have assets. So we need to have a few million dollars in coverage. The premium for the excess policy is $26,275. It does not have a deductible because I'm going to go back a slide. The general liability deductible is per incident. It's not per policy year. So if we have 5 claims that are all above $75,000, we're going to pay the deductible 5 times in order to get coverage, in order to get the insurance company to kick in and pay for their part of it. There is no deductible on the excess policy because generally speaking, if you've already exhausted $2 million worth of insurance, they assume you probably don't have a lot of cash laying around. So they're going to kick in right away. They're not going to make you pay a deductible. Again, excess only kicks in once you've exhausted your general liability, the aggregate on your general liability policy. We are looking at, like I said, a premium increase, but we're also looking at increasing the limit on our excess liability coverage from 1 million to 2 million. We're going to see what that looks like when we get our proposal. The next policy is the Directors and Officers policy. It's carried by St. Paul's Fire and Marine. It offers $1 million of coverage with a $2,500 deductible, and the premium is $1,487 a year. The Directors and Officers policy, which we call D&O, is a policy that protects the individual fraternity directors and officers. So the members of the National Executive Council, the Board of Directors, they're protected. The central office staff, the national officers, all of our chapter officers, and all of the directors from the foundation and all the other national officers are protected from this, are protected by this policy. It protects the individuals in the event that they are specifically named in a lawsuit stemming from their work for the fraternity. So if I were to go visit a chapter and say, yeah, you can totally do this event, and that event results in somebody getting injured, again, assuming someone, assuming that policy is, assuming that incident is consistent with our policies and is legal, that person could come back and sue us and say, well, the executive director said it was okay. Obviously it wasn't because I got hurt. So I'm suing the executive director personally. This policy would offer coverage for me. Generally speaking, the executive director isn't the one who gets sued. Frankly, it's a chapter president or a chapter new member educator or chapter social chair, this policy would provide coverage for legal defense costs and potentially a legal settlement for all chapter and national officers. So the fact that it only costs us $1,400 a year is the bargain of the century. Pretty much any business is going to have a directors and officers policy like this. For smaller businesses, it's usually bundled in with general liability. We're big enough that it has to be a standalone policy. So that's the directors and officers policy. The next policy is the crime policy. So this protects the fraternity in the event that we are the victim of a crime. So if somebody breaks into the central office and, takes the checks out of the lockbox and goes and, starts writing checks and stealing from us, the crime policy would cover us for that. It's carried by the National Union Fire Insurance Company of Pennsylvania. It has a $250,000 limit, $5,000 deductible, and the premium is $2,352 a year. You're probably looking at the limit of coverage versus the premium as compared to the last policy we looked at. Crime claims are really, really common. This could be a crime could be an employee stealing from the company. It could be somebody hacking into our bank account and wiring money out or something like that. Crime claims are unfortunately really, really common. So that's why we pay comparatively more for significantly less coverage. Worth mentioning, we are seeking a higher coverage limit for this policy because frankly, we have a lot more assets than $250,000. And if somebody were to hack into our bank account, it could be bad. So we're getting some more coverage in this area. And we're also working to extend this coverage down to the chapters as well. So if one of your treasurers were to run off with all of your money, there could be coverage for that. That's not super common among fraternities and sororities. And again, thunder. That's not super common among fraternities and sororities, just because unfortunately there is a fair amount of embezzlement at the chapter level. So it's kind of hard to get affordable coverage for that, but we're looking at it. The next insurance is cybercrime. This protects the fraternity and the foundation and the chapters to the extent that you have online assets that could expose you to liability. But this protects us in the event that someone were to hack the foundation and steal people's credit card numbers. The fraternity, we don't have any financial information on anybody. So, they can hack all they want. They're not going to get anything. They're not going to get anything that would expose our members to potential loss. The foundation, on the other hand, they have financial information. So if someone were to hack them and steal people's credit card numbers or banking information or something like that, and then that bad actor were to use that information to steal from our members, our alumni, the cybercrime policy would pay to cover the losses of those members who were stolen from, and it would also pay what can be enormous costs for the organization, because if you were hacked and the sensitive information of your customers, in our case our members, is stolen or exposed, you have a legal responsibility to notify them. You have to mail them a piece of paper in the mail, and if you don't know their address, you have to pay to find their address and then notify them. And I think I don't think it's one letter. I think you have to send them like 3 letters, in addition to covering any losses. So cyber claims can be enormous. That's why we have so much coverage. We have a $1 million per occurrence limit and a $2 million aggregate limit. This is more than enough insurance for us, again, because we don't keep sensitive information, and I don't see that changing anytime soon. The carrier is the Philadelphia Insurance Company. We do not have a deductible on this policy, and the premium is $3,301. So that's the cyber policy. So what does it all cost? You see the numbers up here on your screen. The general liability policy is just shy of 60 grand. The excess liability policy is 26 grand. The D&O policy is about 1,500 bucks. Crime policy is 2,352. Cyber is 3,301. For a grand total, also worth mentioning at this point, we also have a property policy that covers the central office, which we pay like $800 a year for or something. It's a really small policy because we don't have a lot of stuff. But we also have the property policy on the fraternity houses that we own, that the foundation owns and that the housing corporations own. None of that is in here because the cost of that is covered 100% by those houses. The general fraternity is not paying for any coverage whatsoever for those entities. So that's not factored in here at all. So the grand total for the non-property portion of our insurance policy is $93,309.25. Divided by 5,000 members comes to a per member cost of $18.66 per year. So at this point, you're probably scratching your head and saying, well, then why are you charging us $35 per year for an insurance policy that cost $18.66? This is not the end of our health and safety spending, not even close. What it actually costs, and a lot of these numbers that are in bold, these are conservative numbers because we had a really small year last year because we had to shut down in March. So in addition to the 93 grand, excuse me, that we spend for the actual insurance premiums, last year we spent about $20,000 on risk management travel, which is when a campus calls and says, hey, we found out that your chapter is doing X, Y, and Z. We're thinking about throwing them off campus. I get on a plane and fly to campus and negotiate a deal with the university to keep that chapter open. I did this 5 times this year. This $20,000 is not all me. It's not just those 5 times. I'm not like traveling first class and staying at the Ritz. I went to 5 campuses, some of them more than once, and we were able to keep all of those chapters open. So, that's great. But there were other incidents of my predecessor, Mike Abraham, having to fly places, or members of the executive council or the risk management, and now the health and safety committee traveling out. And again, this is a small year. So risk management travel is very expensive. Another area where we have to spend money is professional development. Every year when we renew our insurance policy, the insurance company says, Jim, what conferences did you go to? What ways did you enhance your understanding of risk management? Because it's ever changing. It's not static. There are constantly new risks that we have to deal with. So they demand that I and the risk management committee and the executive council and the other members of the central office staff undergo professional development so that we can continue to manage the changing portfolio of risks that we have. And of course, those trainings are not free. It would be great if the insurance company threw them in, but they don't. So we have to pay for those things. Another significant cost is the online new member health and safety training that all of your new members do. Last year it was through EverFi, now it's through Tightrope. This is another thing that the insurance company demands. They say you have to be doing these trainings, you have to be educating your members about these risks so that, from the minute they join the organization, they're cognizant of what these things are and how to avoid them. And so the long and the short of it is we can either give you guys this training or we can basically just give the money to the insurance company. So we figure it's better to give you the training. This number will go down a little bit this year. First of all, because we anticipate having fewer pledges, but second of all, because Tightrope is less expensive than EverFi, but it's still a significant cost. So that brings the total up to 137K, which when divided by roughly 5,000 members is $27.46, which gets us closer to the $35 that we charge you. So what's happening to that other $6 and change, $7 and change? We're also required to carry an insurance reserve. This is a pot of cash that we have in a checking account, and we have to be able to demonstrate to the insurance company, to Lloyd's, that if we have a whole bunch of claims, we can cover the deductibles. They won't write us the policy unless we some organizations do a certificate of deposit. I think ours is in a money market. I would have to look, but we just have to prove that we have that much cash liquid so that if there is a catastrophic claim or a series of catastrophic claims, we can cover the deductibles. Because as I said when I was explaining what a deductible is, the insurance company will not pay anything until you've satisfied your deductible. So basically, as soon as we have a big loss, the first thing we do is send a check to Lloyd's. We haven't had one since 2013, fortunately, but we have to keep putting a little bit more money in this reserve every few years in order to keep from having to increase our insurance cost, our health and safety assessment that we pass on to you guys. We're looking at increasing our deductible this year to either $85,000 or $100,000, which means we're either going to have to put another $50,000 or $100,000 in the insurance reserve. And that is so that, again, the premium, that is to try and keep the premium increases as minimal as possible so that we therefore don't have to increase the health and safety assessment that we're giving to you guys. So this is fully funded. It's been fully funded for a few years now. Like I said, every few years they up the dollar value on us a little bit. So we do have to pull in from the general fund to satisfy this, but this is stable. We haven't had to pull on this since I think 2013. The big X factor and the reason that we do collect a few extra dollars from every member every year is the unexpected costs. Like I said, last year, we were able to bank a little bit of money through the health and safety assessment because we had a small year. And we didn't have any claims. But in 2018, we had the whole TAW chapter, mess at Syracuse, and we were paying tens of thousands of dollars in legal fees. We were paying PR agencies to try and keep from getting too bloodied in the press, and we still did, but that's neither here nor there. Every time there's a big claim that makes the news, there are tons of costs on top of the actual, travel, deductibles, that kind of thing that pop up that we have to be able to finance. And we're very lucky. My predecessor, Mike Abraham, and the executive councils of the last few years have been very prudent with the fraternity's finances, and so we're in really good financial health. But that could easily change. One catastrophic claim, we max out our insurance policies, and we're no longer going to be paying $35 per member for insurance. It's going to be a lot more, because once you have one big claim, the insurance companies say, okay, you're no longer a good risk, so we're going to charge you exponentially more than we're charging you now. And because there's only one other company, you're going to pay it, because that's the ball game. So that's why we pay what we pay for insurance. That's why on paper, the health and safety program costs about $28 per person. But there are tons of costs on top of these hard costs that we have to be prepared to pay if something were to go wrong. And like I said, knock on wood, we haven't had a big claim since I think 2013, excuse me, when we had a claim that was about $200,000. And so we paid our deductible on that one, and then the insurance company paid the rest. And since then, through the good conduct of the chapters and the proper management of the central office and the good administration from the executive council, we've been able to prevent future claims. But that's why we charge what we charge. So how do we compare? We pay $35 per member per year. The average professional fraternity is paying $15 per year. But like I said, the average professional fraternity has no semblance of social operations. They are a professional society, and that's it. They don't have any houses anywhere in the fraternity, not even a house that a bunch of people are renting together. And they are in no way social. They don't have the balanced program of service, profession, and brotherhood that we do. Compare that to a national North American Interfraternity Conference fraternity that is paying $200 per year per member, or a National Panhellenic Council sorority, which is paying $45 per member. 45 isn't terrible, but $200 was the average. There are fraternities that are paying $500, $600, $700 a year per member for insurance because they have a negative claims history, and it's the only way they can get insurance. So $35 may seem like a lot, especially considering the coverage doesn't. It's not like your car insurance policy where if you wrap your car around a tree, Geico comes in and writes you a check. That's not exactly how our insurance works, but it makes it so that when we do have those big claims, when we do have potentially $1 million claim, we don't have to completely wipe out our savings and then some in order to satisfy it. We can call on our insurance, they'll pay it, and we can live to fight another day. That's why we have the insurance that we have. So some changes ahead. I am working to find member accident protection coverage so that, when somebody does fall and get hurt playing football or something like that, there is coverage for that. That coverage is available. It's kind of hard to get, frankly, and it can be expensive, but I'm trying to get some quotes so that we can maybe get that. And that would not come at an added cost. That would be, we'd build that into the program, and your costs would stay the same. As I said before, we're looking to increase the deductibles to offset the ongoing normal inflationary increases in premium. Because again, we've got the cash put away, so we can afford to increase our deductibles a little bit in order to keep your costs flat. We're working on finding new programming to continue to offset new and evolving risks, and therefore also offset new and evolving costs. And we're always doing our due diligence by seeking quotes from other providers. There's really only 2 or 3 companies that will broker insurance for fraternities and sororities. We're with one of them. So we always talk to the other ones and say, if you can beat the price, we'll talk. So we do that. We do have a great deal of loyalty to the company that we've had insurance with for a number of years now. That's the James R. Favor Company. They have a great relationship with Lloyd's, and they've been very good to us. But at the end of the day, my responsibility is to the executive council, and their responsibility is to you. And so if we can find a way to get you the same coverage and to get you the same benefits at a lesser cost, and it's going to be in the long-term benefit of the organization, then we're going to pursue it. So that's what we're looking at in the future. With that, I am happy to take your questions. I'm going to open up my chat window here so that I can see them. Excuse me. One of the questions that came in was, why are we planning to increase our excess liability? Do we have incidents that would warrant this? We haven't had liability incidents that would warrant it, but generally speaking, when you you want to have as much insurance as you have assets, and we have more than $2 million in assets. So, between the chapter houses when you factor in the chapter houses, we've got tens of millions of dollars of assets. So you want to get as much insurance as you can afford. And, at the end of the day, we could potentially pay $10,000 or $20,000 more to get a couple $1 million more insurance. It might be worth it. We have to look at the price. We have to see what our options would be. But it's worth looking at to see if it's something that's affordable. So that's why we're looking at excess liability. That's why we're looking at increasing our excess liability. Worth mentioning, there are fraternities and sororities out there, social fraternities and sororities out there, that have $10 million worth of excess liability on top of a, excuse me, I'm losing my voice, on top of a $2 or $4 million general liability policy, just because they have bad claims histories or they have major hazing problems and they feel like they need to have that insurance. We have $3 million. And we're bigger than some of those organizations. So, just trying to cover ourselves and make sure that we have the right amount of insurance, have as much insurance as we can get for what we're willing to pay. So what other questions can I answer for you all? Why do household chapters insure through Theta Tau nationally rather than through their housing corps? So the housing corp, they do insure through their housing corps. So the general liability policy covers the chapter's operations. The property policy covers the physical structure. So a little bit complicated. So if and I'm going to use Beta chapter as an example. Beta is a great chapter. They're very good. They don't have risk management problems, but they're front of mind. So if Beta chapter gets in trouble for something, the chapter is going to get named in a lawsuit. If they do something and they hurt somebody, the chapter is going to get named in the lawsuit. The housing corporation is going to get named in the lawsuit as well. Potentially some of the chapter officers and the housing corporation officers are going to get named in the lawsuit. So the chapter and their officers would be covered by the general liability policy. The house would be covered by the property policy. The housing corp officers would be covered by the directors and officers policy. Chapter officers would be covered by the directors and officers policy. So that's why housed chapters insure both through the national fraternity and through their housing corporation. As of this upcoming year, I believe all of our housing corporations, including the foundation, would be or will be insured through our property policy. And again, I didn't get into the details of that because it does not cost the general fraternity a penny, because it's all paid for by the houses and by the chapters that occupy those houses, not by the general fraternity. Next question. Guy from Xi Beta, reach out to me individually. We should have a conversation about that offline, because you're talking about specific stuff for your chapter's costs. Other questions I can answer for you all. What is typical payout in insurance claim in Greek world, and how many of those can Theta Tau afford before it goes bankrupt? That's a really complicated question, and there is no succinct answer to it. I've personally been involved in $150,000 settlements, and the fraternity. Well, I mean, that would be well within the limit of our insurance. But when Tim Piazza was killed at Beta Theta Pi at Penn State, the rumor is that insurance claim was $8 million. And we have $3 million in insurance, and we've got some cash and some investments, but that would bankrupt us. If we had to pay out an $8 million claim, that would bankrupt us. The reality, though, is when you're talking about fraternity and sorority settlements, sometimes the goal is to bankrupt the organization. Sometimes it's, you hurt me, you hurt my family. One member of my family has been killed by hazing, and I want to end your organization. So sometimes that's the goal. Sometimes it is, figuring out exactly where the breaking point is and suing for that amount of money. Sometimes it's, I was severely injured and I'm going to have ongoing medical costs and I want those costs to be covered and they're going to cost X number of dollars. So that's what they're going to come in for. And so sometimes, the claim is a few $100,000, maybe $1 million or $2 million. We have insurance up to $3 million. And like I said, we're looking at obtaining more coverage. But I don't know. I don't know if we're going to be able to, I don't know if we're going to want to pay for it given how expensive excess liability is getting. But there was a Panhandle sorority where a car full of women was driving home from a regional conference. The driver fell asleep at the wheel, crashed. 2 of the occupants were killed. 2 are paralyzed, and I think one was maimed, but is still alive. Has something close to their original quality of life. And I think the payout was $40 million, because that sorority was insured up to the stratosphere, and had a ton of insurance, fortunately. And the insurance company paid out. James River paid out every penny of it, because it was a number of people. There was no crime involved. They were driving the speed limit. They were on the right side of the road. The driver fell asleep, and because they were coming from an official event, they were going home to the chapter house. It was a covered claim. So claims can be tiny. They can be stupid little things. Pay my health insurance deductible $5,000. We're done. Or they can be tens of millions of dollars. It really depends, and that's why it's so hard to. That's why the insurance companies kind of charge stuff all over the place, because it's impossible to underwrite. It's impossible to apply actuarial math to and figure out, what the amount of money that they need to collect in order to cover their exposure is. So what other questions can I answer? So the follow-up question to the 2013 loss. The 2013 loss, I honestly don't know a lot about, because I was like 2 fraternities ago that I've worked for. So I was definitely not involved in that. I think the dollar amount was just over 200,000. I believe it was hazing related. I honestly don't remember what chapter it was. And can't share what it was. But we could theoretically, in terms of paying out the claim, we've got a few $1 million in assets that we could pull on if we had to pay a claim. But then you're starting, once you exhaust your insurance policy, you're starting to get into territory of, are they going to insure us anymore? We pay, as you saw, we pay about $93,000 a year for insurance. If we have a $3 million claim, that $93,000 is at least going to double, if not triple, if not quadruple. So we get into territory of, yes, we survived. Yes, we were able to satisfy the settlement. We were able to pay the claims that were levied against us. But can we afford to go on? That's the question that you have to ask, and that's what some other organizations have had to confront. The fraternal market is in a little bit of a crisis. Well, before COVID, was in a little bit of a crisis, because like I said, there's only these 2 companies that will write insurance for social fraternities and sororities. And then, like I said, James River is the only one that will write excess policies anymore, and they're really close to the tipping point of not being able to make money on it anymore. They already don't make money on it, really, but getting to the point where they're losing so much money that they just get out of the business entirely. Pardon me. And we're getting to the point where the fraternity and sorority community is going to become uninsurable, and nobody knows what's going to happen when we get there. It's not a matter of if, it's a matter of when. Hopefully another major player will enter the market. Maybe AIG. AIG used to write fraternity and sorority insurance before the financial crisis in 2008, and then they got out of it when they reshuffled. Maybe they'll get back into it. They're the 2nd largest insurance company after Lloyd's. Hopefully somebody else will hop in, but nobody quite knows what's going to happen. Does insurance cover traveling to regional and national conferences for members if, per se, there was an accident? Strictly speaking, no. And again, I'm working on changing that. I'm working on getting us a policy that will cover travel for individual members. Like I said, the policy is kind of hard to come by. It's hard to qualify for. It can be really expensive, but I have quotes out. So right now, no, hopefully soon. Worth mentioning, if you get into a car accident, hopefully your car insurance will, will cover you. And always make sure you have good car insurance, because I don't remember if I said this at the beginning of this call, but I used to underwrite car insurance. That's why I know so much about this. Early in my career, I was an insurance underwriter. I had an insurance license for property and casualty lines. So that's why I know so much about this. So if you take away one thing from this call, make sure you have good car insurance. What other questions can I answer for you all? Why is the foundation on the same policy if it's a different legal/tax entity? We have ties with the foundation. They have a licensing agreement so that they can, with us, so that they can use the Theta Tau name, logos, branding, etc. So we include them on our policy. It's not unusual. If you think about it, and again, to go back to car insurance as an example, you and your roommate can get on the same car insurance policy, even though you're not related. You can share a car insurance policy because you cohabitate. Same thing in business. You can, if we wanted to share a property policy, we don't have a pizzeria next door to the central office, but say we did, we could get a property insurance policy with the pizzeria next door because we share a wall if we wanted to. Insurance is a really weird business. Generally, but that's how we are allowed to share a policy with the foundation. But fraternities and sororities have a long history of close relationships with their foundations, and so the vast majority of fraternities and sororities out there have their foundation on their liability policies. And then in cases like ours, where the foundation also owns some chapter houses, they're also on the property policy. So it sounds kind of counterintuitive because they are legally a separate entity, but it's just a matter of course for having them on our existing policy. Other questions I can answer for you all? Well, my contact information is up here on the screen. If you have specific questions, if you want to ask about your chapter's specific situation, please do drop me a line. The office number is up there. My cell number is there. Please don't call me at inappropriate hours on my cell. I do like to sleep occasionally. But feel free to call the office anytime during regular business hours, or if you need to talk after business hours, shoot me an email. We'll set up a call. I obviously don't work bankers hours because it's almost 10 o'clock in the East and we're all talking. But feel free to reach out. I'm always happy to answer questions about this. If I can't answer a question for you, I will get on the phone with our insurance company. God knows we pay them enough, and get you an answer. So I very much appreciate your time tonight. I hope that I was able to answer your questions. I hope you have a good rest of your night and a good rest of your week. Thanks, everybody.